Wall Street's tech-driven rally, a fragile balance. Wall Street kicked off the week on a positive note, with technology stocks leading the charge and helping major indices inch closer to their all-time highs. But here's where it gets controversial. While big tech's rebound is fueling optimism, the market's reliance on these giants raises questions about sustainability. The S&P 500 climbed 0.3%. The Dow Jones Industrial Average added 68 points, 0.1%, and the Nasdaq Composite rose 0.5%. These gains, though modest, were largely driven by tech behemoths like Amazon and Microsoft, which recovered slightly from last week's losses. Their outsized influence highlights the market's current dynamics, a double-edged sword, where their success propels the market, but also leaves it vulnerable to their downturns. And this is the part most people miss. While tech stocks celebrated, the energy sector suffered. Oil giants ExxonMobil and Chevron saw significant declines as crude prices slumped, reminding investors of the market's sectoral imbalances. All eyes are now on Friday's jobs report, a potential game changer. A balanced report could keep the Federal Reserve on its path of gradual interest rate cuts, which have been a major driver of the stock market's recent rally. Lower rates stimulate the economy and make stocks more attractive investments. However, a surprisingly strong jobs report could prompt the Fed to reconsider its dovish stance, potentially triggering a market correction. Conversely, weak job numbers might signal an impending recession, another bearish scenario. Adding to the uncertainty is the looming threat of a U.S. government shutdown. While past shutdowns have had minimal impact on the stock market, this one could be different. Delayed economic data releases could fuel volatility, and the White House's potential push for federal worker layoffs adds a layer of unpredictability. Is the market's current optimism justified, or is it building on shaky foundations? The tech sector's dominance, the Fed's delicate balancing act, and the specter of a shutdown all contribute to a complex and potentially volatile environment. Beyond Wall Street, global markets were mixed. European and Asian indices mostly rose, with London's FTSE 100 benefiting from a leadership change at pharmaceutical giant GSK. Hong Kong's Hang Seng surged, while Tokyo's Nikkei 225 dipped. Oil prices continued their decline, reflecting concerns about oversupply, while gold prices hit new highs, driven by safe haven demand and inflation worries. What do you think? Is the market's tech-driven rally sustainable, or is a correction inevitable? How concerned are you about the potential impact of a government shutdown? Let us know in the comments below.